Hi guys, welcome back to another video. Today we are going to be talking about how to identify an order block and the conditions around it. So this will be a short and interesting video. You just need to know the details about it, and it's not something that is very complicated. So before we get to it, I'm just going to give you an illustration so that when you remember the drawing, you'll be able to identify an order block. So let's just go to the illustration. So order block and breaker block are kind of similar if you look at it in a bigger picture, but not the same thing if you look at it in a smaller picture. In my next video, I'm going to be talking about the breaker block, but today let's just focus on the order block. All right, if you're good in order block, you'll be good in breaker block. So just look at this illustration, right? Just look at it. For a sell, all right, what you need to look out for is what we call the liquidity point. All right, it might be a buy side liquidity, it might be a sell side liquidity. All right, just look at the liquidity areas. So in this case, if you look at this drawing here, there are some sellers that came in here. All right, some sellers came in around here. So let's just put this here. So some seller came in here and they took out the profit, and they went to the upside again. The price went to the upside again. Now, that means when this happened and it takes out the previous seller, so liquidity has been taken out. All right. Whenever this happens, liquidity has been taken out. All right. So then what happened after that? You will now look for something like this. All right. So it's going to take out the areas here. All right. The areas here is going to take it out. That means the buyers that came in here is going to take them out. So as long as the previous sellers have been taken out and we have the price higher, it might be a candle, it might be a couple of candles, it might be one or two, it might be three, it might be one candle, all right, and it might be a couple of candles. It doesn't really matter. But once you see this, all right, and the price came all the way down, breaks this the buyers too, then you are going to be looking for a retracement. All right. So this is the first condition. This is second condition. All right. The first condition, it's going to take out, it's going to take it out. The second condition, it will take these people out. Then the third condition, the price will now come back for a retest. So if this does not happen, you are not to look at it as a valid order block. All right. Because we have a lot of candles that looks like an order block, but they are not actually order block. So you need to focus on the process. All right, the first step, the second step, and the third step. All right. So when this happens, you're not going to be looking for a retracement, and you're not going to sell. So I'm going to give you an hint. All right. If you're looking for the retracements can be 50%, it can be 60%. All right, it can be a little bit below 50%, a little bit below 50%, just within that area. Let's just say from 45 to around 60%. All right, that is when you'll be looking for the retracement. All right, so when the retracement comes in, that means if you measure with your Fibonacci, you are going to measure it from top here down here. All right, some people do measure from here to here, but if I were the one, if you ask me what will I do, I'm going to measure from here to here. All right, because I believe this is more accurate, because these guys there are the real sellers. So I should measure all the way from where the buyer started and to the point they took the profit, and the where sellers came in, because this is where the power comes from. So I do measure from here to here, then I'll look at the 50 points of that area. So once the price retraces towards the 50 points of that area, then I'm going to take the trade and you will see it working. You will just see it working magically. All right. So that is an explanation of an order block. So you can see the first step, the second step. All right. The second step is this. This is the first step. The second step is this. Then the third step is when we have the retracement. So sometimes you're going to have something like this. All right. The price came in here. Then this will not take out the liquidity. All right. You can see. So this will just come down here. So is this an order block? All right. This is not an order block because this guy here did not even take out liquidity. And let's assume that this one too did not even take out. Let's say we have previous liquidity higher and this one did not take it out. So if this one did not take it out and this one came in, okay, let me just draw it. Let me just draw it. All right. So let's say we have something like this. All right. We have liquidity area here. The price here did not take out the price here came up here and retested it and sell. All right, is this a valid order block? The answer is no, this is not a valid order block, because before a valid order block can appear, there must be a liquidity taken. All right, the liquidity must be taken out. All right, that is a valid order block. That's how you know that new players are coming in. All right, because if there is no liquidity exchange, if there is no money exchange, you cannot see a big move. All right, you just see consolidation or something like that. So this is the illustration. All right, so this is what we are looking for. We are not looking for this. So you can also do this on the 1 minute, 5 minutes, 1 hour. It doesn't really matter. All right, any time frame you are trading on. So, and how big will the liquidity be? It can be within a session. It can be within a day. All right, it can be a day order block. It can be a 4-hour order block. It depends on whatever you are trading. So if it is a session, or if it is a session, you are going to be looking for the best time frame you are going to use is 5 minutes. If you are looking for sessions, so that means with 5 minutes and 15 minutes, that means within London session, you'll be looking for another block or another block and a liquidity point that takes out the Asian session. That means the previous session. So if it is during the New York session, you'll be looking for an order block or a liquidity area that takes out the previous session, which is the London session. All right, so that is how you're going to be trading it. If you do it like this, and you practice this very well, you master it, you are going to be successful in it. So let's just go to a few examples. All right. All right. So looking at what we have here now, so you're going to notice one other block around here. You're going to notice one here. You're going to notice another one here. And you also see another example that I gave in here. All right. This is another example. The one that I said is not an order, it's not a verified order block. All right. It doesn't mean it's not going to go to the, to that area. It might not. So it has a 50-50 chance. All right. So it's better to just avoid that and look for an edge, the one that has an edge. That means the one that followed the process. Now let's look at the first one and the second one. So here, all right, here we have the first one here. So if you look at this area now, all right. So if you look at this area now, you will notice that the price took out this high here. So in this case, this area, this day took out the previous day's high here. All right. So this is a day order block. All right. A day, if you're a day trader, you can actually mark the previous day's high, the previous day's low, and to get where the liquidity has been taken out. All right. After getting that, then you are going to look for the second step. The second step is for the price to take out the low. So here, the price took out the high, then the price came all the way down, took out the low of the buyers here, then it went up to retest it. So as I said, it can be 2 candles, it can be a couple of candles, it can be 1, it can be 3. It doesn't really matter. All right, as long as the sellers, the previous sellers have been taken out. All right, here it took out the hold high, then it came back, took out this low, then we have a retest. So as I said, this retest can be 50%, it can be any percentage around 45 to 60. So if I measure it from here to here, what do I see? Look at what I'm telling you. All right, this retrace to exactly 50%. All right, this is a very big secret. All right, so this retraced to exactly 50%, and from here it's just sold. Boom. All right, just sold. So this is a very good way to identify an order block. All right, so I'm going to give you another example here. So if you look at here, look at this. All right, just take a look at this. So this is a session order block. All right, this happened on the 16th of November. It's a session order block. All right, this is the you can do this on the 5 minutes, you can do it on The 5 minutes is better if you're looking for a session, 5 minutes and 15 minutes. So here we have the London session. Here we have the New York session. All right, New York session. So the price of the London session here took out probably the Asian. All right, it took out the Asian session as a form of liquidity. When this happened, you will now look for the buyers to get taken out. Here, the buyers got taken out here. You can see they will now have a retest here. All right, you can see the retest. So if you do your measured move, all right, you're gonna get, or your Fibonacci, you're gonna get the 50% of that area for your entry, and you can see that the price just went, above. So if I mark it, it's gonna look like this. So, oh, sorry. All right. So it's going to look like this if I mark it. So the price took out the Asian, the London took out the Asian, then the price went higher to take out the buyers, then it came back for a retest, then it just went straight up. So it came back during the New York session. So this is a session order block, all right, because a session will always happen within that session. So let's go to 5 minutes or 15 minutes to see it better. This happened on the 16th, so let's go to 15 minutes so that we see it better, of November on the 16th. All right, so take a look at it here. This is it here. So the price came all the way here, all right, took out this here, went up, and it came back. All right, then it went up. So this happened all within a day. It's not like the first one. So this happened all within a day, and it's just played out. All right. So another thing I want you to note is an order block in one time frame is a breaker block in a lower time frame. All right. Another block in an higher time frame is a breaker block in a lower time frame. You can just test it. All right, you can just make a search of it. I'm going to explain it in my next video if I'm talking about the breaker block. All right, so this is very, very important because just look at the order block here. It looks like a breaking market structure. I'm going to give all the conditions for that in my next video, but this happened within sessions. All right, and the question is, how do you identify a session order block? So this happened within the session. So let's go to another example. So this is another example here. This is another example here. So as you can see, this is the price. It came all the way down in the morning during the London session, and it took out the previous session. All right, took out the Asian session, and even the New York session of the previous day took it out. All right, took it out. So after taking it out, then what will you look at? You look for the buyers to take in and also take out the high that the seller started from. So the buyers came in, it took out the high. Then we are going to be looking for the retracement. So this is where the retracement is from 45% to 60% is what you can be looking for. And as you can see, the price just went, to the upside. So this is a very good one, a very brilliant one. So these are good examples of an order block. You are not going to see it every day because order block doesn't come in good shape every day. All right. Market is very, very dynamic. The way the forms it comes today, no, it's not going to be the same form it to come tomorrow. So what you just need to do is just to back test and see different kinds of order blocks so that you're going to be familiar with it. So this will be the end of this video. In my next video, we're going to talk about, types of breaker block. I'm going to show you some secrets about breaker block, how to identify them, things like that. It's more interesting, and you also you will know more about order block if you learn breaker block. All right, because order block is just like the first step of breaker block. So that will be the end of today's video. I hope you enjoyed it, and I'm going to see you in my next video.